Good afternoon, ladies and gentlemen. Today is the 31st of May, and what a way to end the month with Nifty reaching new lifetime highs and Reliance being the one to bring it there. Reliance finally, I mean, Reliance has not participated since I think about 9,500 on the Nifty, but finally, Reliance making some up moves and pulling Nifty to new highs. More or less, the day started on a slightly negative note. The idea was to take advantage of the put options expanding. What I didn't really expect was 15,500 on an intraday basis being taken out the way it was. I decided to take an exit because there's no point in trading when we're entering uncharted waters and there isn't enough data to go by. And at that point, I just booked a mild profit. I tried to book a much better profit, but couldn't do it due to slippage. By the time I exit, I had to give up almost a point and a half due to slippage. But took some positional trades in this kind of IV environment that made sense. And also, since we're at lifetime high, started covering some of my holdings by selling call options to take in a little additional trade because most of the profit on the holdings is just paper profit, and might as well try to take advantage of the high call side premiums when stocks are rallying on the upside. So all that being the case, I think relatively this month was a good month, and later on today you will I'll be putting up, as I have for every month that I've traded on YouTube, will be putting up the profit and loss as well as what the month has been like, an overall summary. So please do check that out. If you aren't already following us on Twitter, I recommend you, if you want to, you can follow at NiftyBN, where Ravi puts up a lot of good OI data, which can be useful considering that markets are in uncharted territories. And you can follow me at Bandi Shreyas, where I share stuff as and when I find something relevant. Thank you so much for watching. I will catch you tomorrow. Have a great day.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The market has just opened, and I've just entered my position as well. And the idea for today is more or less we've opened flat with a slightly negative bias, but Nifty holding over 15,400 and Bank Nifty as well, holding over 35,000. What that does is it gives us a good range wherein we can use 15,200, which has been the support range, and a gap down is something mentioned in previous videos I always prefer. It helps the put options retain some value, especially in a market that is trending upwards, and gives you a good enough entry on the put side. Um, so I've shorted the 15,200 put and the 15,600 call, giving us 400 points of range with slightly under 60 points of strangle value. We've opened flat, and so far the first three candles have been red, and that is giving us some sort of expansion on these puts, which is being more than compensated by the calls. The idea is if we break 15,400, we're going to wait for three candles below 15,400, see what happens there, and then consider moving down the calls to 15,550. Right now, a down move is actually benefiting us because this triangle actually has a negative delta until 15,400, and also relatively market is biased to the downside. We'll keep you posted. Time is 9:26. Okay, the time is close to 10 o'clock. Skipped recording in between, but basically into the down move, had to move the 15,600 calls down to 15,550. And then once the dip start getting bought relentlessly with the strength in Reliance and Bank Nifty, I had to square that off and move it higher to 15,600 again. And also took in a little put side trade to balance the fact that our strangle would have a negative delta over 15,400, moved up the puts to 15,250. Now this gives us a relative balance overall, and yeah, so far we're holding in the range. We just broke Friday's highs once. From there was a lot of strength in Reliance, especially slightly in Bank Nifty, and Bank Nifty is holding over 35,000. So for now, quite comfortable just sitting in this position as is without doing much. And the other position that I'm sitting on, positionally is this 2200 Reliance call sell. This is just a cover for my holdings. I'm holding about 1200 shares on this account and 800 shares in my other accounts put together, and that is giving me overall a benefit from the up move in Reliance. This particular call bleeding is not too much of a concern. 2 days of back up move, I don't want to do some kind of adjustment at this point. I will wait. I have the entire um, month left to go, and these calls bleeding essentially is probably a good thing for me. It is a good thing for me where my overall position benefits. I have no intention of losing money on this trade either. I will eventually do what is necessary to manage this trade and come out of it. A few options would be to sell some put options and take some credit from the put side, making this a strangle, but I will wait since my positions already cover it more than 100%. So that's more or less where we are. The time's about 10 o'clock and we are on a 350 points triangle. The potential up move seems to now have taken a breather. Not going to be doing a lot. One more thing to add, if we have a continued up move and we're heading to 15,500, then I'm going to quickly get out of the position. One move will be to move the puts to 15,300. Um, But as soon as we start testing, if we do start to test towards 15,500 on an intraday basis, then we'll have to rapidly cut out of these calls, because a lot of the reason the value of these calls is slightly subdued and in control is because nobody expects 15,500 to be taken out intraday. But if there is a situation where it starts to become a possibility, then these calls will explode and they will explode really, really fast. So the idea will be to get out in such a situation much before we start testing that level. Okay, another addition is we'll be selling ITC 220 call. Yeah. Reason for this is IV is quite high for ITC by ITC standards because results are coming tomorrow. And once again, I cover this. So by covering it, I know that I have no loss on the trade, more or less. If the trade loses me money, it means I have to be in profit, and and then I can do all kinds of other things to manage the trade itself. So one more thing, people were asking, why are you selling call options into a clear all-time high market, which is potentially got more steam left to go? The reason for that is I'm long a market. I'm holding shares, so I have a lot of downside exposure. All the profits that I've made on my shares are on paper because I have no plan of selling them. But the up move affords me an opportunity to collect a little more cash on it now. Most people sell covers on their shares all the time. I don't sell covers on my share all the time. I sell covers only when they are making a clear strong up move or there is a high IV presence, so that I'm not getting absolute peanuts for the trade itself. Which is why I wouldn't say I've turned bearish by a lot of people like you bearish by selling call options on Reliance. It had such a big breakout. Yeah, I participated in that breakout by having shares. Now I'm trying to lock in some of that by selling call options. Me selling ITC to 120 call option doesn't make me bearish on ITC at all. It just says that I'm hedging myself a little bit by selling these call options. So um, it's you have to look at it from the perspective of what is your overall exposure to that particular instrument, and yeah, that way. Like for example, if I didn't have the shares, then I would definitely not be taking such trades. Okay, in the ideal scenario, you would have gotten out of these calls before they expanded to the extent that they did, just blew up very quickly. To deal with that, first of all, that has wiped out whatever mark to market I was sitting on since the morning. But to deal with that, have moved the puts up to 15,350, giving me almost about 150 points on the put side and 100 points on the call side. So this move has come from Bank Nifty trying to break Friday's highs. Uh, so strength from Bank Nifty and IT as well is now flat for the day, more or less. The thing is into an IV expansion. you don't want to do too much. I'm quite comfortable with the calls remaining at 15,600 despite now the test of 15,500, because whatever rapid expansion had to happen from the covering has happened already. It happened when the spot was at 15,470 itself. So I'm not expecting these to once again further blow up at the 15,500 mark. Okay, we're breaking above 15,500 and I'm going to use this opportunity to exit. Okay, misexecuted one order. I'll get around to why I'm exiting. Basically, put options have a lot of value for the potential of a overnight gap down, and at current pricing, it just does not make too much sense to stay in the position. I'm not expecting it to fall off too much, so it exited at whatever price was available to me. Let's sell these. Thing is, if the market is going to price in almost no movement, then we should have also almost no movement. But we're taking out something like 15,500 on an intraday basis, and that can never be a good thing. So what happens is, with the fear of 15,500 getting rejected, the put options, if I do move them higher, will uh, be at a point where just a rejection will put on 10 to 15 points on the 15,400 or 15,450 put. So I will have to move up the put option to balance the call, which will bleed. And meanwhile, if I do get out of the call option and move it higher, I really won't get that much premium for the, yeah, so not a lot. It's just not worth it trying to stay in the position for longer than necessary. So yeah, one more thing I'm going to do now is I'm going to sell the 700 call option of ICICI Bank, because once again I covered this. So just taking in some call side trade since the market is now trading at an absolute lifetime high for the first time ever, seeing this number on Nifty. I generally try to sell covers whenever there's a drastic up move. ICICI Bank up more than 2%. That's a good time, because generally during drastic up moves, that's when people who are short calls from before are in an urgency to buy them back, which is more or less call side heavy expansion, and that's a good time to sell. I don't think I'll be entering any trade today, but I'll keep you posted in case I do. Okay, so spread I'm taking now is a double calendar where I'm selling the 15,500 short straddle of this month and buying the 15,500 short straddle of the next month. Now, what is this based on? More or less, the monthly positions have started to build immensely around 15,500, giving us monthly range of 15,500. And if you see right now, the prices at which the later dated options are available, which is what you can see from the IV chart. And if we look at it from for a while, Nifty at the money IV is the lowest that it has been in a while. Now, of course, it's completely possible that India VIX heads below 15 at some point, but overall makes this trade a good trade. So I'm going to be taking this trade. Now, the only thing I'm concerned about is the bid ask spread. What is the spread looking like? So these are the buyers, these are the sellers. There's about 2 points in the July. Okay, 2 points is not bad. 2 points on the put as well. These are completely liquid. These are monthly options, so these are no headache with them. The headache would be here, and I'll go ahead and take all of this. I'm doing it at 10 lots per trade. That way, it gives me less slippage. There's really not much liquidity there. And then I will take slippage. It's no point. You will see that it will show negative mark to market on this trade as soon as I enter it. So the idea will be to do this with 40 lots. The thing is, so I'll explain this trade now and what the difference is between a short straddle and this trade. Okay. Yeah. Okay, so the order is executed, and this is more or less very similar to the spreads that I had taken previously. The only difference between the double diagonal ratio spread in this is that I've shorted at the money on both the put and the call, and I purchased the same at the money strike. So there's no difference in this, and the ratio once again is 3:2. If you noticed, I executed 10 lots on both sides, but the execution was in a 3:2 ratio because the lot size changed. So I'm going to keep this in a 3:2 ratio, and this trade gives me a pretty good break even of 15,100 and 15,950 almost, which is a very good range from where we are currently on the spot. And at the same time, what is the plan for the trade? The plan for the trade is to book this trade at around 3 to 4%, which should happen at the slightest increase in IV, or even if we hold range for about 8 to 10 trading days. So the allocation is such that the sizing of the trade as well is such that, and once again I stress on this, accepting the risk even if we gap down at the circuit, I will not be taking too much of a damage on my position. That's because this is relatively aggressive. It's not a perfectly hedged trade. If you're perfectly hedged trade, you can allocate to whatever extent you're comfortable. But since it's not a perfectly hedged trade, I prefer not allocating more than the capital that I have allocated to it. So yeah, I'll keep you posted on this trade. More or less, this trade will benefit from a spike in fear. It will also benefit from us being range bound. Time is 11 o'clock, and I'm not planning on entering any other trades for the day. Trade that we have entered just after entering, we've had an upside move that is leading to call expansion. But more or less, the concept behind this trade is to gain overnight. We're not going to look at what happens intraday of this trade. So yeah, thank you so much for watching. That's more or less going to be it for today's trading day. I will see how tomorrow's day is going to be with the new margins kicking in. It should basically mean that I should be allowed to take roughly 25% lesser of a position than what I do for intraday, which is fine. We'll have to see how that works out, if that benefits the premiums overall or does not, or leads to some kind of a supply side shortage on the option selling side. So it'll be interesting. Thank you so much for watching. I will catch you tomorrow. Take care. Okay, just to add, I have now just sold this Reliance 2000 put for 14, just to buffer the fact that these calls are starting. I mean, they are bleeding quite a bit. They've doubled, but they're completely covered by my holdings, which is why I'm not concerned. But at the same time, I can't let the trade itself start to lose quite a bit. So just taken in a mild amount of put side credit to buffer the call side a little bit more. Yeah, that's the only update.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.